My good friends, if you've been thinking of how to use the bank's money to either start investing in property or maybe to just scale up, maybe you had one or two properties and you're thinking of how best you can scale up. In today's video, I am going to help you in terms of how we can be able to understand the interest rates, but making sure that we can use it to our advantage, because that's what we do. Using the bank's money is one of the golden things that you can do in your investment. So I'm gonna start by saying that I think there's maybe around about 5 things that I'm wanting us to go through in this today's video, which is basically what we now call MTL, not MTN, but MTL. Monday 10 minutes learning. In round about 10 minutes, I'm going to give you everything that we need to know about this particular topic. And we are answering the question that somebody sent to us. It says, TJ, what are the interest rates for home loans in South Africa? I've been looking all over the internet, but particularly, is there an impact on my property investment? So I thought this was a good question. And let's start by talking about, number one, we're going to talk about the interest rate history, because we can learn from the history and we can implement our strategies going forward using that. Secondly, we'll talk about the good and the bad. And then thirdly, we'll speak about how does the bank actually decide to charge you. And then lastly, we'll look at a few banks in terms of how do they actually charge you. And some of you do not know this, but we will cover all of that. So if we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. So back in early 2000s, I would say that prime interest rate, it went at as high as 15%. So 15.5, that's the worst that we have seen in recent times. In 2008, which was the financial crisis in South Africa, the rates dropped to around about 10%. During COVID, right? This is like 2020, 2021. The South African revenue, or SAB as we call them, they dropped the interest rate to a 50-year all low, right? So this has never been seen before. They dropped it to around about 7%. And this was obviously to help the economy. As of today, or should I say as of recording of this video, we're seeing a prime lending rate at around about 11.75. And some of you are thinking, what does prime rate mean? Prime is just the amount or the percentages in terms of interest that the banks can lend. So you will hear some people saying, I'm on prime plus 1, I'm on prime minus. So that prime is actually set with SAB, and all the banks kind of like follow that, and then they start to give. But I'm going to explain all of that just now. So as you can see, my good friends, over the years, it's a reality that interest rates will go up and it will go down, dependent on a few things: the economic pressure, the inflation, and some of the decisions that SAB is also going to give. And the governor, you see him coming out from time to time. What do we mean by SAB? South African Reserve Bank. That's what it basically means. Okay, right. Let's start to talk about the good and the bad. Right. Especially if you're an investor, right? You are doing this because at some point you want to, not some point, but now you want to earn alternative income, and you are wanting to utilize other people's money, the bank's money, right? That's what this video is all about. So the good part of it is that, yes, my friend, if you are earning any rental income on the property, you can also use that to get a tax deductible expense, because it's something that you are doing as a business there, so you can leverage that. You can also control, this is my happiest moment, you can control properties that are worth a couple of millions with maybe as little as 100,000. So as an example, you pay a deposit of 100,000, but you have bought a property for 2.5 million. So thanks to the bank's loan, now you're controlling this property for 2.5 million. You paid a deposit of 100,000. Hey, you are making 190,000, 100,000, like some of the deals that we show on Wednesday deal day. Today is Monday, it's learning. It's Monday 10 minutes learning. MTL. Right, let's go on and speak about the bad stuff. The bad stuff, I think everybody knows. That's why a lot of people say, oh, it is bad. Don't go and borrow money from the bank. And I'm like, yeah, but you can also make money with the bank's money. So the bad and the good, there is both sides of that. And I'm always saying, guys, learn how to do these things so that you can be benefit to you. The best stuff is that interest will go high, like what we have seen. It went to as far as 15% at one point. So obviously, if you've got some high monthly repayments to do, it's going to eat up in your cash flow. It's just the reality. So over 20 years, you can imagine if you are topping up there, you're topping up like many of you are doing with the complexes that you are buying into and you're told it's an investment. Some of you, if you're to do the maths, you're actually going to pay double on the purchase price based on the interest that you are not carefully looking into. Some of you have just had an aha moment. That's all right. Here is the tip. The greatest tip that I can give you is your job as an investor, my good friends, is to make the interest work for you, not against you. I'm going to say that again. Your job as the investor is to make the interest work for you. You gotta make it work for you. So as I go on, let's jump on to talk about how the banks set interest rates, right? I'm going to start to talk about SAB. We spoke about SAB. They've got what they call the repo rate. So the repo rate is just basically they set it out from time to time. I think we're sitting at around about 2.5 at the moment. And then the banks, what they do is they throw in a risk factor. So this individual, what is their credit score? What is their income stability? What other debt do they have? The property that you are actually buying, so the type of it. Is it residential? Is it commercial? Is it student housing? So all of these properties come with their own type of risk. So now the banks looks at all of these ones, and then remember, SAB, they've got a repo rate, and now the banks, like all the banks, ABSA, FNB, they now have what is now called the prime rate. So with that, the banks add on the margin on the repo rate, right? And then obviously now, that's now what's called prime. That's just to confuse me back in the days. I'm like, prime, here's a repo, what is this? But now I understand it. I've just given it to you now in the simplest way I can think of, right? Now, the prime rate now is going to be, at the moment, I think it's sitting at 0.75, which means that the banks will be making the difference here. But they now say TJ is a reckless guy, he doesn't pay but he's got a steady income and he's buying a student accommodation. So they'll say prime plus 2. So what does that mean? 10.75, which is the prime, and then they'll say plus 2. So which means that now I'm going to be paying 0.75 on the property that I'm buying because of all these other conditions that I spoke about. Somebody else would likely maybe pay a little bit less, prime minus half a base, which means that they are going to be paying half a base on the prime. So which will mean around about 11.25, right? Half a base is, yeah, I did say 75. Yes, there you go. Hey, my friends, I apologize that I had to break this conversation, but I just wanted to bring you in this conversation of property management. This can become such a hassle. If you've got more than one tenant and they're in different places, this can really become a stress, because all you're now needing to do is to manage tenant issues, maintenance calls, late payments sometimes, and endless paperwork. So my good friends, I have been deploying all my properties to a company that is called Productive Realty. They are out in Boksburg, and all they do is manage properties, particularly for early investors, particularly for seasoned investors, actually for all investors. And they do this because they themselves, they are also investors in properties. They understand the game of investing and managing. The money is not made in buying properties. I always say to people, the money is made in the management of the actual property, because that's a lifelong, you need to be able to pay all the things that you need to pay for. So the company Productive Realty, my good friends, and Leroy Slava, He has a big team there, and they manage their portfolio, and they can also manage your portfolio. So if you're in and around Johannesburg, particularly in the east, they are readily available to actually just be able to jump on board and take over your properties wherever it is right now. They will do placement for you. All of these things that we spoke about, the tenant issues, all of that will be gone because Productive Realty will be able to manage that for you. So my good friends, all you need to do is drop us an email. You can see where it is here, and the team at Productive Realty will be able to take all of your hassles away from your tenants, and you can be able to have peace of mind, sleep, hassle-free investments whilst they are managing all your tenants for you. So what are you waiting for? Be like me and jump onto Productive Realty. Let the guys help you out. All right, so my good friends, as we go on, I want us to speak about the types of interest rates. There is different types of interest rates that are on the offers, and we need to know this so that we know how to choose, right? It's like one of those things. You might be a yellow bone guy, so understanding the type of women that they are out there, if you're exposed, then you have a better chance of choosing the right one for you. Maybe you like them Coca-Cola bottle shaped, so you choose that one, right? That's what you want. But if you're in the neighborhood of where there's no Coca-Cola, or you don't know that there's a Coca-Cola bottle, but that's your type, right? You never know, right? So I'm giving you options, right? With the options, then we can make the right decisions. Does it make sense, my good friends? By the way, we have started off a new playlist particularly aimed at us understanding the banks and the financing and property investments. In this playlist, my good friends, it's called South Africa Bank, Property Financing and Investing for Parents. So all you can do is to jump onto our search, and then you type that, and all the videos that are talking about that are in there. Now, why am I telling you this? Then I also want to hear from you on what are some of the other questions that you'd like to. So at the bottom of this video, there's a comment section. Ask me any questions. I've been a banker before, you know that, so I can be able to answer some of these questions. If I don't know, I'll look out for a friend who is still in the banking system, and they can be able to answer some of these questions. So here we go. Interest type number one. Interest type number one is that it is called the variable interest. This is the most common one. All the banks use it. Absa, FNB, Nedbank, Standard Bank, and basically it's based on the repo. If it goes up, your interest goes up. If it goes down, your prime goes down, right? Whatever that you're paying, your repayment. That's what it basically means. So it's always great, obviously, when it's falling, you're paying for less. We have decided in our business that even if it's falling, we pay for the same amount because we are chipping off that debt. The second one, interest type, is called the fixed rate. The fixed rate, I think, I heard about this at my early investment, and I decided I'm calling the bank, and then I called the bank, and then the bank said, no, we don't offer that. So I'm like, oh, okay, great. But fixed rate is it's a limited option. So many banks, you may call your banks, and then they may say no. It just means that maybe your profile is not geared there, but they do offer this. Different banks offer that. It is locked for a period of 1 to 5 years. Banks like Absa, or should I say all the banks, they offer it. And it's generally offered after your bond approval. So your bond has been approved, and then after that. So it is good for budgeting. Imagine if you're just paying 11% and you're paying 11% for the next 5 years. Good for budgeting, right? Irrespective whether the interest is going to go up, it's going to go down, yours is fixed. That's what it basically means. Usually the bank will reassess that, and then they'll make it a higher. They'll make it like a 12, that kind of thing. And they're trying to just make sure that they are still in business. Now, there's other companies, I want to say not companies, other banks, we assume they are banks, right? But they're not really banks. As an example, SA Home Loans. It's not like a bank, but they are a mortgage lender. So they are lending still, but they're not like a bank. They don't have savings account, checks accounts, those kind of things. But they are offering competitive variable rates, which goes back to point number one. Repo goes up, it also goes up. It goes down, it also goes up. Because I'm of the view that they are an on lender. They kind of like get the money from somewhere else and then they own land as a mortgage, so they're making money on the difference there. I love them. I like them. They've helped me to come back into the game back in the days. Another type of interest which is also offered with another specialized bank, it's not really a bank, but they're mortgage lender, right? Or bond lender, right? And these guys here are called TUHF. Many of you would know them. And basically they specialize funding in the inner city or multi-lets, and their interest rate is generally higher, which is a prime +3 all the way to 5 I've seen. And but they give you access to deals that the traditional banks wouldn't, and that's why they put in that other extra 2%, 3%, and obviously that's just to protect their risk. So the biggest tip I can give you as I land the plane is choose your funding correctly based on your strategy, not just on the rate, right? But you can also see that not all banks will give you the same amount of money or interest across board, right? So look at long-term holding, look at low monthly repayments, look at when it's you have higher monthly repayments. What's going to happen here? So try to be as flexible as you can, because remember, you're an investor, right? So I want to say to you, interest is good, right? But it's got its advantages and disadvantages. Now, as an investor, I'm going to leave you with two things. Number one, always compare offers from at least 3 institutions. So using a bond originator is the amazing thing ever. And the second one is that if you're investing, structure your deal so that when the rental income should always cover the bond, even if the interest goes up. TJ, how can I do that? Well, I'm going to give you tip number 3. Always stress test on a spreadsheet. So we've got plenty of spreadsheets that we do in the academy. So jump on into the academy, register there, get some of these tools, and you can then stress test your deal with a +2%, +3%. Will I still be able to make money if the interest rate changes? And that's what you want to do. You always want to still have cash flow, and you are good to go in your investment. So, my good friends, I'm hoping that this has been of great value. Don't forget, Wednesday is coming, Wednesday Deal Day. And today it is MTL Monday. 10 minutes of learning, and I note that today we went slightly over. We'll get to the 10 minutes. Until we see each other again on the next video, it is your boy TJ. Boom! Happy investing!